Well, that's Kunal's high-risk, low-risk ideas. Let's also introduce Vikas Sethi, MD of Sethi Finmart, on the show. Vikas, good morning. Let's get in your, top stock recommendations as well at this hour.
Yeah, good morning, Mobina. My stocks would be, from a long-term point of view, I would recommend investors to invest into these stocks and keep at least 9 to 12 months viewpoint while buying into these stocks. The first idea is Minda Corp. It's a leading auto component company. It caters to passenger vehicles and two-wheeler segment, and which forms around 60% of its revenues. And both the segments are doing pretty well. We've seen month-on-month numbers from auto companies, and they're really doing well. So I'm pretty bullish on the auto component sector. And this company would be a major beneficiary of the transition which is happening from the BS4 to BS6 compliant vehicles. And the fundamentals are pretty solid. The company declared pretty robust numbers for its September quarter. It reported a profit of 27 crores versus a loss of 29 crore in the June quarter. The debt equity ratio is reasonable at 0.44. I find the stock very attractive at the current levels of around 80 rupees, and my targets in 9 to 12 months time would be 110 rupees. And the second stock which I would like to recommend today is again a very solid company with pretty strong fundamentals. The name of the stock is Granules Norton. Stock trades at close to 600 rupees today. It's a Saint-Gobain group company, which is a French multinational. The company is into manufacture of abrasives, refractories, ceramics, and silicon carbide. And they find application in high growth industries like automotive industry, defense, health, and food. I'm pretty bullish on this stock as well. The fundamentals are rock solid. It's an absolutely debt-free company with a pretty high return ratios, return on equity of around 15%, return on capital employed of around 23%. So I think one should be buying into the stock at the current levels of around 600, and my targets are 750 rupees in about a year's time.
All right. Thanks for that update and both of your wealth creation bets. Moving on to viewer queries. First up is a Twitter query from Nageshwar Rao Anavarapu. He is based in Hyderabad. He wants to know if he should buy into GE Power at the current market price. He also wants some fundamental view as well, given that the stock has sharply corrected from those 800 odd levels. He would like to understand why that's happened and how are the prospects looking like for the company at the moment. Kunal, coming first to you, if you look at the recent 1 month chart of GE Power, it has seen a very phenomenal run up from 170, 180 odd levels, and right now trading 100 rupees higher from there. Where do you see the stock go from these levels? Do you think it could sustain this momentum?
Well, very difficult, Karanya, because even though the last 1 month the stock has seen a recovery from 180 to 360, 375, which it tested, but prior to that, the stock had has a history of going through a very sharp correction. So I think almost the start of this year as well, the stock was at 800 rupees. From 800 rupees, the stock has gone through a consistent downtrend. In fact, even in this COVID recovery or post-COVID recovery as well, we've not seen the stock breaking above the 200 moving averages. The recent sell-off which had happened for G Power was from 375 to sub 200 levels, and it had happened with a very sharp set of volume. So both on the volume fronts, on the price fronts, I don't see any major positive coming across for the stock. So I would clearly, I would advise to clearly avoid the stock. I think if you bought at high levels of 800 plus, then I believe you should try and look to exit on rallies and look out for some other investments. I think from the power space itself, I can suggest one of the other stocks, that's Tata Power. I think it's looking extremely attractive on the medium to longer term charts, forming a big breakout on the longer term or the monthly chart basis. I believe from levels of 60, 61 when it's currently trading, I think Tata Power can hold potential for at least a 50% upside over the next 6 months to 12 months. So would suggest a shift from GE Power to Tata Power.
All right. So that's Kunal's recommendation on a GE Power. On the fundamentals, meantime, Vikas, anything that you would like to recommend, Nageshwar?
Yeah, as far as GE Power is concerned, my views are also pretty similar to Kunal's views. Although the stock has corrected from its highs of 800 rupees to the current levels of 280, it had actually gone down to levels of 170, 180 levels, and from that it has recovered a bit. But I think the reason behind this fall, which is the parent company, the General Electric company of the US, exiting this company, I think that needs to be taken note of. And I would not advise buying into the stock at the current levels because fundamentals have clearly changed. And there are several other ideas within the power sector. And if you leave the power sector, then there are several other ideas in the market where one could put their money in. So I would recommend and avoid at the current levels. But for those who have already invested, they could continue to hold on with the kind of move which it has seen. And I think there could be some more upside left. So at the current levels, no fresh buying. But for people who have already invested, can hold on to the stock.
All right. On then to query number 2. This is from Kamal Jaipuria, based in Delhi. He's bought 50 shares of M&M at 925 rupees a piece. Wants to know if he should average. The buying price definitely is at the higher end of the spectrum. Kunal, what would be your recommendation?
Well, I'll say that I think you should look to average M&M, but I think the averaging also has to now has to happen in 2 phases. I think first of the average which you can do should be at current levels of 720, 730, where the stock is apparently trading. And I for one believe that there is a possibility that when the markets go through a mild corrective phase, many of these auto stocks from a short to medium term view, even these stocks would go through a corrective phase. And I think in that regard, you might probably see M&M coming back to a 600, 650 kind of a zone as a trading place. So I think you should look to average because of the stock. The last 6 months of price recovery, it indicates that the stock is setting its multi-year uptrend. And I think in that regard, since your buy price is at a higher scale, I would advise you to average. And as I said, average it in 2 phases. First one, which you can do it at current levels, and the second tranche should be done where the stock comes back to a mean reversion point, which is around 600 to 650 mark.
All right, so that's of course the technical view coming in on M&M. It's definitely seen quite a strong move recently, but of course our viewer has bought it at 925. He's definitely exercised a tremendous amount of patience. Kunal, we had discussed this stock with him yesterday as well. Vikas, on the fundamentals, do you see M&M well placed? And again, we'll take a longer term view out here. If indeed you believe that it is going to get back to that 925 level, which is Kamal's cost price, do you think that this is a good time for him to purchase more and average it out, perhaps try to bring down his cost price?
As far as M&M is concerned, the stock had witnessed a very sharp fall in the month of March when it came down to levels of 250. And I'm sure the investor would have bought at 925 levels and then have seen the stock tanking down to as low as 250 rupees. And from there, it had seen a remarkable recovery to the current levels of 725. And it's, I think, pretty close to its 52-week highs. The stock looks good. It's headed for much more upside from the current levels. And I'm sure his targets, his cost can certainly be seen in the next, say, 3 to 4 months. And as far as averaging out at the current levels is concerned, I think since the stock has already seen a good run-up, I would advise the investor to keep it on radar and accumulate it on any fall. Meaning I would expect if the market corrects and the stock corrects by, say, 10% from here, that would be an ideal price to average his cost of acquisition. So that would be my take on Mahindra and Mahindra.
All right. Thanks a lot, both of you gentlemen, for sharing with us your stock ideas and also helping our viewers out as always. Slipping into a short break here. More updates on the other side of this break. Stay tuned.